Hey, Rick, looking back across 40 years, what actually made the difference for you? The thing people underestimate about how a career like yours even gets built?
Great question, David. I think a lot of people have a tendency to maybe chase what the salary is, especially on the front end. And so I think the first thing that I always did was go after things that I found interesting and not worry so much necessarily about what I was getting paid at that moment in time. Obviously, it's always nice to have upside downstream, but that doesn't mean that you need to get paid that on day one. Secondly, wherever I was curious about or interested in, or I thought it was cool or whatever, I went off and tried to pursue those things. And so I didn't play it safe. You got to do A before you do B, and you got to do B before you do C. So I did not do that. Third point, took me a little bit to figure that out. But once I figured it out, thought about stacking skills and experiences on top of each other. So it wasn't just independent one, two, three. It was what does one, two, and three equal when you put it together? And what does the finished product look like? Thought about that. Another thing that I did definitely pay attention to is who my boss was going to be. Early in the career, people get a lot out of who they're working with, the mentorship they get, the boss that they have. And so I think people underestimate that. And then another opportunity for young people is, are they going to be the youngest person in the room? Are they going to get a chance to tag along, learn from, experience projects at a higher level? And so for a couple of my stops, I was often the youngest person in the room. In fact, I was just kind of running that in my head. The first four things I did, I was the youngest person in the room. Move on to the next thing, higher level, but youngest person in the room, youngest person in the room, youngest person in the room. So you keep your eyes and ears open. A lot to take away from that.
Was that ever intimidating, being the youngest?
Oh, yeah, all the time. It would be a little bit of that, fake it till you make it kind of thing. Or you'll figure it out. Like, you're not going to have to perform brain surgery just because somebody says, hey, perform brain surgery. You get a chance to figure it out after the fact, or spend the time you need to learn what you need to learn to get it done. And those same good bosses and mentors that you sought out on the front end, they're going to spend time with you. So I think it can be a little intimidating. Was for me, I know that. With that said, it was also very interesting and in some parts fascinating, because I was kind of learning and growing and seeing how things fit together, and then having the experience like now. Early on, I did investment research, so I was analyzing companies. That's a skill. Trying to make a determination whether it's a buy or a sell. That's a skill. Then I went into investment banking. That's about raising money, selling companies, packaging a story, telling a good story, telling a story that will get either buyers or investors to reach into their pocket. So that's its own skill. And then venture capital and private equity is putting money to work and kind of tying those things that I learned, yet not as simple or as clean and tight as buying a stock in the public markets, because you can push a button, buy in the morning, push another button, sell in the afternoon. When you're making private investments, whether you're private equity or venture capital, you're in it for the long haul, kind of like getting married. And having those three different experiences together, all which were very unique, and not a lot of people get the opportunity to do that. And I had the opportunity to do all three. And so putting those three together, as I said earlier, kind of stacking them, was important and interesting to me. And I encourage other people to think that way as well.
Great. What do you see ambitious people actually get wrong about careers or wealth?
Well, it has to start with what I just said. Getting a job because it pays a little bit more money, or even a lot bit, depends on what you're going to learn, what you're going to take away, what's the next step. And so it's not just about what that salary is today. And it's not just about what that bonus is at the end of the year, because 5 years down the road, 10 years down the road, 20 years down the road, those thousands of dollars, which seem so important at the time, are going to ultimately end up not becoming important. And I don't want to say trivial, because money's money, but they become less important over time. And so definitely getting hung up on what the salary is. Also, there's a little bit of ego to say, oh, I'm in this industry or that industry, I'm doing blank or whatever. And that's fool's gold. You're chasing what you think is important to the outside world. That's definitely an ego thing. You're worried about what that title says on your resume versus what you're going to learn, what you're going to take away from it, and how you can then downstream lever that to do other things. So those would be a couple of, I think, key mistakes. And then might be a little bit too, and I'm going to talk out of both sides of my mouth on this one. You don't want to be so quick to move on to the next thing, because then you're perceived as a job hopper, and 6 months here, 12 months there, 9 months here. With that said, you don't want to stay too long and be stagnant. You want to continually be adding interesting things or moving up or what have you. So I don't know, that's one of those subjective things as to what the right time is to move, but a logical progression. Don't want to be stale, but you don't want to be perceived as a job hopper. So somewhere in between, where you're learning, growing, and adding things to your skill set. And yes, the resume is important, but the title and the company you work for are not the only things.
Yes. What would you say you fell more into? What side of the bucket throughout your career?
Probably later in my career, stuck on some things maybe a little long, but that's later in my career. Earlier in my career, I did 1 year, 1 year, 2 years, 2 years. And that was a logical progression given the roles I had. And there was a story behind making those changes and the progression. If it was that same thing, 1 year, 1 year, 2 years, 2 year, for somebody else, they may not have the exact same story around it. So one could perceive me as being a job hopper, but I was really moving from spot to spot to spot, not just going across the street doing the same thing just for a different company. And so I guess using that as a guideline, somebody is going to hop. Probably better to do it earlier in your career, because the stakes get higher later. Positions are tougher to get. You're moving up the totem pole, as they say, and probably better to be a little more aggressive when you're younger versus when you're a little deeper into your career.
What do you tell a first-time founder at month 3 that no one else is telling them right now?
Another good question. I think that people get locked into whatever it is they thought they were going to do, and they don't want to change. More of a, not job hopping, more of a pivot around what a company is doing. I have always argued, going way back, that if you're not having some level of a pivot, you're not listening to what the market is telling you, because nobody can possibly know everything that a market has to offer. And you bring an idea to market, you bring a concept to market, you bring an MVP to market, then you bring a product to market, and everybody's telling you stuff all day long, some good, some bad, some neutral. And if there's not tweaks in that, then they're not listening. So what I would say is, don't be afraid to tweak things, or even a hard pivot. With that said, again, you want to be over eager, but if you aren't changing, you're not listening. And so some people would say, don't change, don't do this, don't do that. And I think every single day the market is telling you what's going on, and it's your job to listen, decipher, pick the signal out of the noise, and then say, okay, I'm going to add these 2 features. I'm going to cut this one out. I'm going to delay, bring in this thing on. And so you're just kind of tweaking the recipe. You're not saying, oh, I'm going to go from, selling hot dogs to selling steaks, but you're tweaking the recipe to make refinements that continually make you better. So it would be that commitment to excellence, that commitment to make daily improvements. And that comes from going to market with whatever stage you're at, listening to the people you talk to, showing it to as many people as possible, and being quick to make mental notes around what you're hearing and what the feedback is.
Do you believe that has compounding effects over time?
100%. And it's not just compounding. I'd argue that it's logarithmic. So absolutely 100%. Just like you need to brush your teeth every day, you're supposed to floss every day, go into the gym, any good habit. And in the business world, little micro refinements, actually the same as a yoga practice. You're just trying to make micro refinements to get better each and every day. And if you make a bunch of those, all of a sudden you go from having to sell your product to the market wanting your product so bad they're coming to you, and you're more answering the phone and being an order taker versus trying to sell somebody hat in hand, hey, gee, I'm trying to raise money, or I'm trying to sell this product. Folks will find you if you create a product or service so valuable to your marketplace. They will find you, they will seek you out, and they will want to buy your product or service. And if you're not there yet, then continue to make little refinements and improvements along the way so that hopefully someday you do get there.
Yeah. When someone is in transition that is asking for your help, what is the first question you ask them? What does their answer really tell you?
I actually get a lot of calls about people in transition, and I wish they called me and they were a little more organized. The standard call is, hey, I'm in transition. I'm looking for a new gig. You got it? Anything in your network that comes to mind. Okay, that's just not focused enough. So probably, given that I hear that the vast majority of the time, my next question would be, okay, perfect world, you have a magic wand. What exactly do you want to do? Who do you want to do it for? What is the title? What are the responsibilities? So to basically have them storyboard the ideal offering that they're chasing and would like. And most people aren't thinking that way. So that's more kind of the abundance mindset versus the scarcity mindset. So if they go in thinking like, I want this, I'm a perfect fit for this size company providing these services and or skills or being able to plug a need at a company doing this, as opposed to, hey, do you know anybody who's looking, just totally changes the dynamic. And then from there, be very specific of like, hey, I'd like to meet Jane Doe at XYZ company or Joe Smith at ABC company. And so somebody who's coming to me, the best way I could add value to them, and probably honestly, the best way they can serve themselves, is to be focused on exactly what they're looking for and why. And that's company, that's position, that's role, that's responsibilities. The company is the size of company, industry categories, and as specific as possible. And then the second thing would be, I want to meet, again, Jane Smith, John Doe, whatever. And that allows me to utilize my network best as I can to help them achieve exactly what would make them happy, and not just necessarily define, whatever the next paycheck's going to be.
I love it. Let's find a kind of common point. Of those people who have sought you out in years, is there anything that they commonly said or would, need or want?
A lot of times people are in a vulnerable position. More likely than not, if they're calling me, they didn't leave at their choice.
Yeah.
Sometimes people will proactively step away and come back and get back in the game, and then be trying to find whatever that next thing is. But most of the time, not. So they're vulnerable. So what are they probably going to lack at that moment in time? At some level, might be a little bit of confidence, a little bit of swagger. And so I guess I would encourage them that the transition experience is normal. And honestly, it's healthy if it happens every once in a while, whether it's by their choosing or not. And if they're being honest and realistic about themselves as to what their skills are and where they'll fit and what they bring to the table or lack, then the opportunity is kind of exciting. Opportunity is, hey, you can make your life better by finding a better fit for an organization that suits you. And at this point in your life, you're capable of such and such a role that might be further down the road than they were a long time ago, or maybe not even that long time ago. And so it's a blessing of a business to career to have the opportunity to, whether it's a full-blown reinvent or a slight pivot or just a linear, step up, any of those things are wonderful opportunities for somebody trying to kind of reinvent themselves and build their companies, and build themselves by finding the right company. And so, I don't know. I think it's a great opportunity if approached properly, and people might do themselves a genuine service by reframing how they look around that, and also calling somebody like me instead of saying, "Oh, woe is me, I got laid off." It'd be, "Hey, got laid off, part of the journey, not surprising. The company, been doing these things in the past, or I saw this stuff in the press or whatever. Hey, I think I'm perfectly positioned to do X, Y, and Z now at this point in my career." And most of the time, we're all learning and growing and become better people and better employees or business people or whatever.
Sure.
And so, in theory, whatever they land on doing actually should be better than what they're doing before. So it's an opportunity. I'd encourage people to look at it like that and then try to really create what they want in life.
I love it. I love it. Let's get personal for a moment. You and your partner went separate ways with Sherpa. What was that kind of whole end chapter like, of what you're willing to share, of course?
So there were three of us at Sherpa. Mac Lewis was the senior guy, the ringleader, the CEO, mentor, coach guy. Mac at the time was in his 50s. Steve Peterson was sales marketing, go-to-market, business, biz dev. And at that time, Steve was in his 40s. And I was the finance, deal guy, capital markets, investment guy. And I was in my 30s. And we had a nice mix. Putting together a partnership is a little bit like putting together a rock band. And we all had a nice niche. We had complementary skills, and we were from different age groups and therefore had different life experiences. And so when we talked about making investments, we honestly had very good conversations because we came at things from so many different perspectives.
True.
Like a rock band, trying to hold an investment partnership together is not easy. There's a variety of different things going on. Everybody has stuff in their personal life going on. We have the dynamics, the investment partnership, and then I've said this before, so make it family friendly here. You don't have the sex to patch things up. So being in any kind of business relationship is not easy. I think for the three of us, when we split, there were a couple of things going on. And often, like with any of our personalities, what is a strength in our personality can also be a weakness. And one of our strengths, which I mentioned, was the generational differences. And what that meant was, on the positive side, we had good, robust, healthy conversation around what investments to make. As we moved forward, though, we had different goals for our careers, given our ages. We had different things going on the home front, given our ages. My kids were little, and that created stress. And then everybody's got their personal stuff going on. My mom, unfortunately, got sick, got a weird blood disorder, and ultimately ended up passing. And then, unfortunately, my marriage wasn't working and went through challenges when that was going down, and then I split and ultimately got a divorce. So there's a lot of dynamics going on within the group, within each of us individually. And then when it came time to raise the second fund, and we actually had enough to do a first close on the second fund, it just became clear that there was too much going on behind the scenes. And given our ages and where we were at that point in time in our careers, there were just too many differences. And it wasn't anybody's fault per se. It just, there were too many differences. And I use the analogy of a rock band. We came together at a moment in time. That moment in time worked for us professionally. We fit in the marketplace well at that moment in time. We did some good deals. Provation Medical was a deal that I led, and we sold that very successfully. I learned a lot. I'm very grateful to have had that opportunity to do Sherpa. It was the springboard to doing my own thing. With that said, like many relationships or rock bands, everything has a time and a place, and things just kind of weren't right for us. So we ended up not doing a second fund, just walked away from the money we had raised. And, a band can have a good first album and not do a second album. And I know that at the time, all three of us were grateful to have had that experience and to have done that. And just ran into Mac recently and enjoyed our conversation and laughed about things. And I see him and his wife Mary every once in a while. And so, it's a chapter in life, and was a springboard for a lot of good things for me. But ultimately, we decided not to do a second album.
Yeah. What did that split kind of teach you that you could not have learned any other way?
Well, I tell you what, you learn more from your mistakes than you do from the things that work. And investments that I made that didn't work as well as I wanted, or we made as Sherpa, taught me a lot. And the deals that we got involved with that were not successful were wonderful learning experiences for me. And unfortunately, we launched Sherpa at like the worst time possible. We were out fundraising in 2000, 2001, raised a little over $20 million, which in the big picture is not that much, but back then that was a good initial fund, and we did some good stuff with that. With that said, the NASDAQ corrected and then ultimately went down, and vintage year funds from 2000, 2001, like the worst in like 35, 40 years of venture capital. So it just was a very challenging time. And I think the good part for me was that there were some deals that, while they didn't work, taught me a lot. And I'm making better choices now as an investor based on things I learned back then. Similarly, had a deal, like I mentioned, again, Provation. We did very well there and had a wonderful IRR. And being the point person on that also taught me a lot. And what I do now with my investing actually would be kind of a hybrid private equity venture capital from stuff I learned earlier in my career, shaped by what I learned at Sherpa. And now I go into things, fewer number of deals, more conviction, larger ownership, more fingerprints on the deal, more involvement, higher touch. And that stuff came from things that I learned at Sherpa. And so now, instead of having 10 out of a deal, 1 out of 10 deals work well, this current portfolio, out of 10, I might have 5 or 6 that are very well, very good. And so I think every step causes one to learn. I also think that forced me to, in a way, take more ownership. I was one of 3 people, and that's fine. That's what a partnership is. And that was a learning that allowed me to go do my own thing. and say, hey, I can go do this on my own. I'm capable of doing it on my own. And so there was a personal growth journey to have the confidence to not rely on other people and to have maybe the determination and or a little dose of stubbornness to go do my own thing. And had we done that second fund at Sherpa, I'm not sure that I necessarily would have went off and have done my own thing. And so super grateful for that. Super grateful for learning what I did and to have the life experience of going through a down market and trying to make investments and learn and observe what's going on. And I think that's helped me immensely in the sense of a lot of people chase after what I would call a hot deal because money's flowing there. AI, for number one, too big, too broad of a category, but people are chasing after that. And I saw the .com infrastructure boom. I saw the .com boom, and then I saw the .com infrastructure bust, and I saw the .com category bust as well. Earlier, back when I got going in my career in the 80s, we had biotech boom and bust. There were some other IT and healthcare related things back then, and then the whole green energy. And so I have not chased after the hot category, the hot deals, because of having these experiences. And that has helped me by keeping me focused on the fundamentals of a business. Is it a good business? Is it a good category? Are we going to ultimately make money? Is it not propped up by government intervention? And there's no way I would have been making the successful investments that I've been making on my own had I not had the Sherpa experience. So for many reasons, Sherpa was a springboard to me, both personally with my life journey as well as professionally. And I'm super grateful, even though we didn't do a second fund and even though the times were quite tough at that moment in time. But in terms of a life journey, it was immensely valuable, and I will be eternally grateful, especially to Mac, because he was the one pulling it together. And Mac has been a great friend and mentor to me and supportive, both obviously professionally, but personally as well. Yeah. And so all those things come from having that experience, even if that experience ultimately isn't perfect or have, a happy ending. So like everything, you get out of it what you take and what you allow yourself to learn and grow from.